More than 57% of all homes sold throughout 2025 has already lost value, on average between 8 to 10%, meaning anyone, whatever they paid cash, took mortgage on it, they're already underwater. Oh, my little friends, there is a new real estate collapse coming in 2026. It's not coming, it's already here. And we're not exaggerating over here. It's a very interesting article that was just released from Bar Chart and alongside using the due diligence of Wall Street Journal. And if you could look at over here, the market hasn't seen such a big slide in pricing for the last 14 years. Even right after the financial crisis in 08-09, we haven't seen such a big steep slide. So pay very close attention. We're gonna look at the situation through the perspective of the developers, through the middlemen, which are the brokers, the salespeople, and the realtors, and the people who actually consume the properties, which are renters and buyers. Everyone is in such a bad situation. Look at this. So currently, we're experiencing the biggest price slide in areas that were overdeveloped. The most popular areas where a lot of people relocated to from their own original location. The main data over here indicates that the current price decline is not only bad for people who are currently listing their properties for sale, because they wait 120 days. No one actually shows interest. They have to delist the property because they don't want to look bad. Because if you go online and look for a property, either to buy or rent, and the property is over 100 days on the market, you as a buyer or renter, you have a huge leverage over the person who rented out or the developer, right? Because the developer is in such a bad situation right now. Why? The prices to build brand new building are much higher than before. It costs much more to build the same size of a building. Also, they have to pay higher wages. On top of that, the insurance is sky high. But they don't really care. This has never been an issue for them. They just add this to the price, create a package for either buy or rent, give this to the middleman, which is the broker. The broker look at this and said, yeah, ain't gonna happen, G. We have properties we cannot rent out. Much better location, has views, balconies, and they're 20-30% cheaper than your current prices. Ain't gonna happen. And look at what the Wall Street Journal actually reported. This is probably one of the most important reports so far. According to Wall Street Journal, the condominium prices in the US in September and October has seen almost 2% decline. And this might not, appears to be a big deal. But this is the biggest decline since 2012. And we're talking about right after the housing bubble, when everyone was thinking, oh, this is probably the best time to buy. The market has bottomed. Everywhere there is deals. You can find, duplex, you can find triplex. And people were not quite interested. But over here, things are getting even more interesting. Zillow, on the flip side, is putting out a report which shows that the people who recently purchased condos, they just bought a condo, and the price of their condo that they purchased, it's already down 10%. So people who recently purchased a condo, most likely there, if they paid cash, it's kind of okay, to see a short-term decline in value. But if you actually got mortgage and you have some crazy interest on the mortgage, and you're not only losing money by the value of the property going down, but you actually feel that you're overpaying for something that might see even greater decline. So according to Zillow report, 10% of the condos are now currently valued under the sales price. And what does it mean? This means that owners currently are underwater, and they will be stuck with this property for whatever the length of the mortgage is. If you rent it out, who cares if you rent it out, right? Not to mention that if you're an owner, the HOA fees are going higher, the property taxes are going higher, and like I mentioned, the developer costs, even the developer cost is not gonna go low. It's gonna remain steady. The only thing that could actually go down could be the demand for a certain period of time. Because when you have an overdevelopment, the supply and demand equation changes in favor of the people who consume. Right? This is not happening quite so often. What else is happening over here? So according to the same report, the HOA fees currently sit at around $4,000 per year on average. So just think about it. Regardless of your crazy property taxes, right? If you buy a condo, you have to put on the side, on average, $4,000 per year. And this is maybe not a lot. For New York standards, of course, not a lot. There are condos here in the city, like they have like $6,000, $8,000, $9,000 a month HOA. So this $4,000 per year, it's not a big deal, but obviously for Florida, I don't know, it might be a game changer for a lot of people. Because remember, a lot of retirees are moving to Florida, right? So they don't have like crazy amount of savings. So any changes in the predicted expenses or cost of living that they did when they retire and they move, they said, okay, this is our fixed cost, fixed expenses for living. We know exactly how much we're going to spend a month for this or that, how much we can afford. And when something like this changes dramatically, this can push a lot of people in a very, very bad place. Don't get me wrong, I love Florida, I love Miami. Definitely a very nice place, better than New York City, but you cannot hide the fact that probably they will be the one hit it the most with all this steep price decline. We're about, maybe we finally are about to see some very reasonable price decline, because people have been speculating for many years. Real estate bubble is bursting, real estate crash is coming, and then so many people are praying every year, right? Because they simply cannot afford to buy anything, and they hope for this crash, and this crash never comes. And hopefully, we might actually experience one of those. It will be good to reset the market, to reset the prices, to give some leverage to actual users, right? People who are really struggling to find a place to either live or buy. Second important part over here, the prices of the buildings from 2024 currently are worth less. The building built in 2024 versus the buildings built in 2025. The prices in 2025 are lower, you have less deals, it costs more money to build, versus 2024. In 2024, as you remember, the mortgage rates were at 6, 7, 8%. So no one was buying on the higher mortgage rates when the buildings were cheaper to build. Now we have a lower mortgage rates. The buildings to be built for the builders is more expensive, but also the prices of the properties are lower. Do you understand what kind of mixed reality we're living right now? According to Zillow, 85,000 listings in September 2025 effectively has seen a sharp decline and reduction of the listing price. Effectively, anyone who listed a property throughout the year and expected to get different prices either for rent or essentially to sell the property has to reduce the price. A lot of people actually completely delist the property, send someone to take new pictures, because now the AI can identify if you just repurpose the old pictures. And if you ask Perplexity, let's say you want to buy this condominium over here, currently listed for let's say $150,000, figuratively speaking, and they release the whole property with the old photos, the Perplexity can tell you, you know what, the same exact apartment was actually listed for $240,000 just a month ago. So effectively, just based on a visual search of the images and replication of the same exact listing, all the information, they're trying to erase the information, erase the old listing, erase all the data, and release the properties with lower prices. This changes also the graph that you will see on Zillow. Remember the price history of the property, when was acquired, what pricing, what was the most recent price cuts or price hikes, or what was the price that the property was acquired prior. All this information is simply erased when you take a new pictures and create a new listing. Sometimes they even change some of the information or structure the information in a way in which that the bot will not identify that this is the exact same property on the exact same location in the exact same building. We're talking about actual panic mode for a lot of people. Second important element over here, something that we haven't seen since the 08-09 financial crisis. We're having a shocking demand crash. No one is actually looking. Why? Because first of all, they were very, very scared that the prices will go higher. They got scared that they're gonna get fired because of AI. They didn't want to take mortgage, so they said, you know what, I'm just gonna rent. And this created, as you can see over here, the lowest level of demand that actually peaked below 1.4 million in November 2025, which was down 2.5% month over month, which effectively means that all the people who are delisting the previous listings, right, they're not just going to give a small discount on the previous listing. They're going to give a sharp discount because they're not just competing for clients, they're competing with other builders or other developers who are effectively looking to find somebody to live in their building, right? The bloodbath continues. According to Zillow, listings saw 26.9% cut in late 2025. So going closer and closer towards the end of 2025, they were already looking for escape valve. Not gonna be surprised seeing the usual 1 month free, 3 months free, 4 months free, just to get you to sign the lease. And because this lease is usually duration have 12, 24 months, depending how panicked they are. Because even if they lock a lease for 24 months on much lower rate, right? Nothing that they were expecting to offer this property for, it's still better for them because, like I said, a lot of people speculating for recession. And if recession actually hits, believe me, these people will be the first one to get hit. Of course, after the commercial real estate. But the commercial real estate in this very moment, I believe, might actually be in better position simply because we have all these data centers, we have a lot of machines and technology that will be related to building the AI infrastructure. So if there is actual recession crash, will be very different than the normal cycle of the economy going downturn because the AI infrastructure will be needing a lot of this commercial real estate space. Don't quote me on this, but this is what we're speculating. Also, the last point from the Zillow report is that there is a major seller panic on the private market. This is very interesting. Why? Property taxes are going higher and higher and higher, and they will not stop going higher every single year. The second point is that HOA fees are going higher and higher and higher, same exact trajectory. The problem here is that the appreciation of the property cannot catch up. Same thing with the wage growth. The inflation going sky high, but your salary, your check is not going high. You're still getting paid very, very little, right? So the wage growth cannot catch up with inflation. That's why everyone is broke. Same situation happens with the real estate where the fixed costs of the owner on the private market is going higher and higher. It's fixed cost, but it's kept going higher and higher. Maintenance higher and higher, HOA higher and higher, property tax higher and higher. But your property doesn't worth more, doesn't go higher and higher. In fact, a lot of these people are willing to sell on loss. You bought a condominium for $1 million on some, high peak market. You paid closing costs, you pay property taxes, you pay HOA fees, you pay to refurnish the building, right? And then you kind of panic. You know what? I don't want to live here. Let me sell the property. I'm going to list for 1.5, break even on 1.2, 1.25 or 1.3 and make 200K profit. Ain't going to happen, my G. You can't break even on this deal, right? It's very, very hard to go out of deals where the upfront cost is crazy, the maintenance cost is crazy, everything goes through the roof, and these people are panicking. So if the gold goes to $144,000 per ounce, the US government will be able to completely pay off the national debt, which is absolutely mind-blowing. But this will have a major caveat for the US dollar. Let me tell you about the biggest scam in life. When people are poor, all they want is to get rich. When people get rich, all they want is to not look poor. So what they do, they buy all the stuff that makes them look wealthy. Then everything that they want is to protect their wealth. So they hire all the security and they hire bodyguards and they build high fences. They distance themselves from the normal people. At this point, everything that they want is just to have a normal life. It's a full circle, my dear friends. Everything starts from having nothing, being no one, and don't need anything to go back to the exact same spot. Just it takes a whole lot of things to happen to realize it. Just think about it. Why would you need to dream about being rich when you're poor? Months later, just realizing that all you need is to not look poor because you already made the money. Months later, just to realize that everything that you need is to protect yourself. And months later to realize that everything that you actually need and want is to have a normal life. It's absolutely unbelievable how this is true, how this works, and how many years it takes for every single celebrity, famous individual, wealthy individual to realize it. Just think about it. Especially people who, let's say, have a very, very poor upbringing. They didn't have money when they were young. A lot of these people peaked in their careers probably mid-age, and there are just a couple of years where these people actually spend money on nice clothes or jewels, and after that everything became normal. Just look at David Beckham. In his early career, everything was fashion, nice clothes, Rolex watches, suits, haircut, hairstyles. Now the guy's like living in like farm. He's like a beekeeper. He has like a small farm with. He doesn't care about all this stuff, right? Sure, there's different element of the society where people are groomed and they grew up with nice life, right? They're born in nice mansions, born with private security, they're born with private drivers, private chefs. But I honestly think these people are the least appreciative to all these material possessions. So what does another Ferrari makes difference in your life? Absolutely none. But for normal people like us, everything is the full circle. Everyone wants to be rich. When you're rich, everything that you want is to not look poor because you already made the money. How I'm gonna show the other people I made the money? Stop looking poor. Then when you're already looking rich and you're rich, the next step is how I'm gonna protect myself. Hire the bodyguards, build the high, tall fences. When you start living this life, you realize that that's not what I was expecting. I want to have a normal life right now. This is why people are, firing the security guards. Remember, currently Treasuries has a major pile of gold in Fort Knox, but the revaluation process of the actual gold, it stays at the levels of $42 an ounce. This was the last revaluation in 1973. There is a process between the Treasuries and the Federal Reserve where they reevaluate the position or the value of the gold. The last pricing or evaluation was at $42. Current price of the gold is not $42 per ounce. So this means is that if the US government if the President Donald Trump actually want to reevaluate the gold again, which means they're gonna open the books, they're gonna reevaluate the amount of gold times the current prices, and then the Treasury will effectively make a transaction with the Federal Reserve, and the Federal Reserve will give the amount of gold valued at the current prices. Could be $800 billion. This will be free money for the government, and this is only at the current prices. If the prices of the gold per ounce go higher, it will get much easier for the government to capitalize and essentially pay off debt using it. In some way, you had an asset that appreciated, but because it's the government owning the asset, they don't really have to sell the gold to capitalize on the appreciation. It's like, we bought this gold, now this gold worth this much, give us the appreciation in form of a payment, like a dividend type of payment, but we still have the gold and we have the payment. It's absolutely amazing. It's like you're buying a house for $400,000, the house now worth $4 million. You sell the house, you get the $4 million appreciation, but you still keep the house. It's the best deal ever, right? But again, it's a long process, it's not for sure. But remember how Elon Musk and Dodge actually went to Fort Knox to see if the gold is actually there. The gold that was on the books, and probably this was one of the first steps to making the step towards this. And this is very interesting because if you really think about it, every time when they did that, they did this 3 times in American history, the gold actually went up, but the dollar lost even more value. And this is good for the economy in some way, because if they're able to clear completely the US debt, right, there will be definitely a short-term storm. This is something that a lot of people are speculating in called reset. But this will clear a lot of the risks associated with government bonds, government debt. Maybe they will kind of restart the interest and the demand for buying bonds, treasuries, etc. Because at this current rates, it is so hard to find buyers when they issue a new batch of treasuries, long-term or short-term, right? Even the bond market has suffered a substantial decline in demand. Also, China dumped a lot of US bonds. So the idea over here is that this is indirectly, if you really think about the practicality, this is some form of a link back to the gold standard in some way. Why? Because you have an asset, which is gold, which appreciates and can always be cashed out by the government holding the asset without selling the asset, right? It's like, in some way, a money printer which was not producing anything for the last couple of years. The gold has been stuck, at least for the last 5-6 years, no significant appreciation. And this current rally we're seeing for the last year and a half is kind of paying off some future appreciation. It allows probably for plan B, because plan A for paying off the US government was, again, creating the Bitcoin reserve and pushing the prices of Bitcoin sky high. This is the speculation number 2, where a lot of people are speculating that there is a inherent interest for the US government to push the prices of gold higher, because their revaluation will give them even more money. So their gold will worth more if the price of the gold per ounce is higher. Like we started the video with, the price of $144,000 per ounce is effectively paying off the US national debt, which is, again, it's not a one-sided thing. There will be a major consequences, not only for the dollar, but you understand that every asset that could be or couldn't be reproduced effectively will change its value, right? Everything that could be printed, everything could be remanufactured, everything that couldn't be manufactured could see even a higher appreciation, like the Bitcoin, right? If you think about it, everything that has a limited circulation supply will have much higher value. Not because people believe so much in it, but there is nothing else to bet on if you see the actual reset. Think about this, right? This is plan A and plan B for paying off the debt. I don't know. It's interesting, but there's a lot of questions that no one can answer. No one knows what actually will happen if